Wednesday, the 10th of March. I am Bosin Omofaya and welcome to Frontier Opening Bed. Ali Kansachu in Nairobi, the CEO and founder of Rich Frontiers Management. Joshua Debisi is the head of banking analysis at Vetiva Capital. Akitude Sulaiman from Greenwich Merchant Bank, a member of the research analyst team. And of course, Ayodeji Ebo is joining us from Chapel Hill, Denham, one of the Nigeria's big investment banks. Thank you very much, gentlemen. Let's move on very quickly. The markets across Africa were a little bit mixed yesterday, the second trading day of the week, and you can see those numbers there. Some green shoots in South Africa, Kenya, and Ivory Coast. Nigeria fell sharply, nearly 2%. Egyptian market a little above 1%, also in the negative territory. This morning, breaking news: the Nigerian Stock Exchange sent a press statement stating that its demutualization process has been fully cleared by the Securities and Exchange Commission and the Corporate Affairs Commission. So the Stock Exchange says in that statement, and a video statement by Oscar Onyema, the president of the NSE, separate video interviews, that they are now ready to move to the transition phase of this process, which will put a formal end to the 61-year history of the Nigerian Stock Exchange. All the subsidiaries to be that have been created under the new demutualized stock exchange has now been cleared by the SEC and the Corporate Affairs Commissions, all duly registered, and now the transition phase into a new future started for the Nigerian stock market. Congratulations to them. Let's get on with the East African corridor very quickly, checking in through the East African market. Homeboyz Entertainment, not so much music. Coming from last year, the profit for 2020, according to the profit warning, will be much lower than expected for this company that listed by introduction last year. Nation Media Group share price is fluctuating, bouncing around the cabin after that share buyback program, which the largest media group in East Africa is undertaking. Kenya seems to be getting a bit more better part of his tea program as tea auction, as prices seem to have jumped. And good news for Kenya's electricity or power system, with EDF Group from France getting in bed 23% stake in B-Box Kenya. Ali, take us through this. Give me some music from the Homeboyz.
That's very good. Let me start with that headline. Homeboyz Entertainment was introduced to the stock exchange by a listing. So they did not actually physically sell any additional shares. They spoke of a price discovery process ahead of a possible share sale. They've reported that they've issued a profits warning. To be frank, this secondary board, which is GEMS, where they are currently listed, has had a terrible track record. There's only been one share, which was a gold-backed Barclays ETF, which has performed. Everything else has significantly underperformed since it was introduced. And there's a string of them, Home Africa, a whole bunch of them. So it's been problematical. I think the intention is a good one. It's to give fast-growing, early-stage companies an opportunity to list at the stock exchange. But the problem is that a lot of these companies have come with inflated values, which have then, when you go through the price discovery process, the price tends to slide. So I think the NSE has to look much more carefully at whom they're allowing to come, at what sort of price as they move forward. To jump to your next headline, Nation Media. Nation Media, I remember about 4 years ago, hit a price of 300 shillings. Earlier this year, it got to as low as 10. Then the company pronounced that they would do a 10% share buyback, and that lifted the price nearly 110%. Subsequently, we've now been trading off. Look, the thing with Nation is it's in a very difficult space. That is the media space. You know, we're all communicating on social media. The daily news is out of date by the time you pick it up on the street because you know all the information anyway. And they've now moved from that old model, which was predominantly dependent on print media and the flagship Daily Nation, to a paid-for subscription model. And the question is, do its consumers have the appetite to pay for it? So we'll have to see how that plays out. But what the company is saying is at 10 shillings, this was an egregious share price. And if they weren't going to put their money to work and put more skin in the game, then who would? So overall, a positive signal, but plenty of volatility in the performance. Weekly auction prices, which were pretty soft last year, have been improving steadily. There is more demand globally for Kenya's tea. India's tea prices surged last year, so I think you've seen a rerouting of demand and some new markets develop. So that's a positive step. This is a more than $1 billion income earner for Kenya, and therefore very key to Kenya's GDP prospects for 2021. French utilities, EDF buys 23% in the energy firm B-Box. This is all about alternative energy, delivering predominantly solar energy down to the household level. And there's been great success around this, using typically M-Pesa as the payment model on a per diem basis. It's worked out very, very well. But also, it's interesting when you contextualize it. We saw the release of Kenya Power's results early this morning, and they're finding their business being eroded by these players who are coming in and supplying power to the end consumer directly. Kenya Power reported a full year loss of 48 cents a share. A significant credit loss is expected on financial assets, and some impairment as well. So you can see that Kenya Power is struggling, and you've got a lot of these folks like B-Box are coming and nibbling at the edges, and increasingly people are turning to them because of the consistency of the price when you compare it to the enormous volatility in Kenya Power's prices.
Thank you so much, Ali. Let's quickly cross to the West African coast. We just touched about the Nigerian Stock Exchange clearing the last hurdle there for its demutualization. But we got one big story yesterday from the Central Bank, NAFDAC, and the Ministry of Health. The Central Bank yesterday gave the first initial about 250 million to 5 indigenous R&D institutions that are now cleared, 3 of them to do indigenous herbal research into COVID-19, the other 2 into other pharmaceuticals. This is all part of the Central Bank healthcare interventions that is now being started with the COVID-19. News on the street says Mauritius Commercial Bank is looking to open in Nigeria. Where that will happen is anyone's guess, but we're just sniffing around for that. Nigeria's foreign trade figures came in the water. That deficit, about 7 trillion, is in everybody's eye. This morning we got news that Flutterwave has secured about $170 million in funding, fresh funding, to bring the company's total value to a little above $1 billion. Across the rest of the West Africa, Vista Bank is getting some 10 million euros from ECOWAS International Development Bank, that's the EIBD, for on lending to SMEs and SMIs. And more growth within the French-speaking West Africa will be around 5.8% rebound in 2021. Let me quickly get Ayodeji to speak very quickly to the Central Bank Healthcare Initiative with the NAFDAC and this funding round. Then Joshua, I want you to speak to some of the stock exchange and those earnings. We got UBA numbers over the last 72 hours on the street, and I can today you will weigh in on this foreign trade story. Ayodeji, let me start with you.
Okay, yeah, thanks. I think what I would say is one of the good things that we can pick out of this COVID pandemic. It's the shift in terms of our focus to investment in the health sector. So we can see on the back of the crisis, the CBN setting up an intervention fund to provide R&D, because which we know it's really very critical. There are some even peculiar, what I'll say, virus or disease that are really peculiar to Nigeria, that if they're able to research into that, it will also help reduce. Health is wealth, like we would always say. So I think this is a positive one, and I think efforts, even after we've been able to surmount COVID-19, focus should not shift in in terms of support, providing significant support for the health sector. It's critical, and we need more also private sector participation. I think part of what we may also government may need to do, they may want to legislate like we have for the pension fund, which is also mandatory to make a monthly contribution. We can also have that health insurance policy, so that we're able to mop up enough cash, and you would see a lot of the HMOs would be able to set up very standard hospitals that would also reduce it will reduce the demand for effects for tourism or for people going traveling outside for treatment. Now, coming to the fund, about $170 million that just been raised by Flutterwave. This is really, it's also sent a very positive signal about Nigeria. We're always happy once in a while when we hear some of this positive news amidst all the several challenges. You would also notice that some months ago, the Paystack were able to cash out. So it's highlighting the opportunity within the digital space, and also how Nigerians can be genius, how Nigeria can, how we also need to focus on the tech industry. It can be a major cash cow for FX. $170 million, we'll see that impact when the NBS report comes out on capital importation. You also there's also a news around that the listing would be there will be listing in the New York Stock Exchange, or there may be a dual listing. I know maybe the setback about Nigeria would be the issue around the way Nigerian investors perceive companies, even when they are not profitable. Most Nigerian investors are after dividend. But you see in the US market, you see a lot of companies that are listed, and they are giving you a projection that they will be profitable in the next 5 years. But you see, based on the capital appreciation that you get, most people are still comfortable to invest in those companies. So, speaking to our the regulators, the Nigerian Stock Exchange, would need to shift focus from just having very profitable companies to have companies that have potential for growth. They may be in underwater, but once you begin see how they narrow down on that loss position, that would also be positive for us.
That will be very positive. Thank you so much. I don't mind seeing Flutterwave on NASDAQ, by the way. Joshua, the Mauritius Commercial Bank coming to Nigeria with a branch? Is this a case of the more the merrier for you?
Well, so the thing about Mauritius, we have to remember, first of all, is, what the Mauritius and those, those types of banks, what exactly their specialty is with regards to, finance and transaction. I don't think they will be coming in for, the traditional commercial angle. They'll be more geared towards specific clientele.
Yes, we heard it's going to be the oil and gas industry.
Right. So, so I think that's definitely a good one. I'm always happy to see more players in the industry. If that does come to fruition this year, I think that would be extremely interesting. With regards to movement, and also with regards to FX as well. But you also touched on bank performance. What we saw from UBA was very impressive with regards to just pure performance. That they did in excess of 100 billion in profit after tax, which is again another record, the best they've done, in their entire history. Unfortunately, it did not reflect with their dividend payout. And like IODG said, Nigerian investors, that is, the most important thing to the average Nigerian investor.
Joshua, you're getting 35 kobo. You're getting 35 kobo as final dividend. Okay, it was 80 kobo in 2019. I understand.
That is the problem. Unfortunately, if you want to, no matter what you do, if you want to go backwards, the Nigerian investor will perceive that as a negative. So they don't care that EPS went up to over 3 naira, 20 kobo. They don't care about that at all. They just see it. They sold the counter down 10% yesterday, just based on the fact that
Yeah.
Final dividend, overall dividend for the year is 52 kobo in total. I mean, so that just gives you the mind state of the Nigerian investor. But with regards to what I did, you said it as well about Flutterwave, I'm very excited. The prospect of Flutterwave, becoming a publicly listed company would be very exciting for me, just because I'll, finally get a chance to look at their books and to see, how their business, operates on a granular level, because I think that would really paint a broader picture of the Nigerian financial space, because payments and payment systems and payment platforms are a very, very big part of the financial system in Nigeria right now. And we're seeing a lot of companies coming out, and there's still a lot more to come. And you also have to remember that a lot of the big companies are getting involved. You see GT Bank with their Habari Pay, they are also trying to enter that market and enter that space, and that could be a very exciting thing for their own valuation going forward. So I think this is all very, very exciting times for digital finance, really.
I agree with you. You said these payment system guys are the ones behind, they're the backbone of the AFCFTA, and I can tell you that whatever you're doing, I think these folks from overseas can see the money in Africa under the AFCFTA. I think they're already flying in through the windows, whatever, and taking position ahead of what the intra-Africa trade will look like. Because today, the Afrexim Bank, with the entire COMESA, which is the Common Market for East and Southern Africa, are signing an agreement, which is a big event, which should be taking place in about an hour or so from now. I can give me a minute of your thoughts on this trade deal. By the way, it looks like Q4 seemed to be a soft landing for us. Do you think that went in line with the GDP numbers that we saw for last year?
Yeah, for the trade data, it's not surprising that we saw a plunge in total trade. Looking at the fact that there were a lot of demand shock and supply constraints that we went through for the larger part of 2020. The total trade settled about 32 trillion, with imports having the bigger share of that, settling about 20 trillion, increasing about 17%, and largely due to manufactured products, which contributed about 64% to total imports, followed by agricultural products, which as well contributes about 7% or thereabouts, increasing about 79%. So overall, we'll say that the larger value of imports that we saw is largely due to depreciation of the naira, and as well inflationary pressure that was seen on product prices. So the imports might not have been volume driven, but it's actually the value of those products. On the export side, we saw exports decline. I mean, with no surprise, looking at the fact that the oil market, which contributes about 86% to our total export, was under the waters for a huge part of 2020, and that is in tandem with the GDP, because if you look at GDP as well, you see that oil was largely under waters from the GDP perspective in terms of output as well. So the output, the lower output quota for Nigeria as well is a factor to that, and as well the lower prices we saw in 2020. We saw exports decline about 34% for the year. So it's in tandem with what we've been seeing at the GDP perspective. However, if you look at it from Q4 perspective, it was, I mean, that was like the saving grace. If not, it would have been worse than what you actually saw. And looking at the deficit widened because, I mean, the huger impact of decline in the exports. But if we are going to look ahead, you expect that Q1 numbers will come out better. We'll see a tighter deficit in Q1, because we've seen some bit of uptick in prices in the Brent market. And as well, Nigeria production is going to has improved marginally, and since Nigeria will be ending its quota production is sometime in March, ending of this March. Although it will impact the Q1 number, but going into 2021 in the full year, you should expect that the deficit will decline, and as well exports will increase. And since the CBN is having some administrative control on FX, we're expecting that this might curtail import as well, and the import number might not be as solid at what we saw this year, because a huge part of that devaluation we have taken effect, and we're not looking up to that huge devaluation again for this year. So deficits at the long run for this year, we expect that it will be lesser than the current 7.3 trillion that we're seeing, and export as well should the value of export should improve going into full year 2021.
Okay, great. Thank you so much, Akitude Suleiman. We have a whole lot story within the Southern African space, but I want Ali to quickly just touch on one of them, which is South Africa's GDP numbers, a contraction of about 7%, which was reported early yesterday, which is of course still being digested by everyone. But a 1.5% growth in Q4 also seemed a little bit like Nigeria's story, by the way. Shift by Q4.
This was the worst GDP print for, I think, yes, Boston, this was the worst GDP print for, I think, 100 years. So it's a real sticker shock, the minus 7% GDP print. I think, it speaks to the fact that South Africa endured not one, but several hard lockdowns. And I think the question that we have to ask ourselves is, are the ingredients for a rebound, can we see these ingredients for the rebound? Q4 gives us some reason to be a little bit more optimistic, but really we need to see significant follow through. I think from President Ramaphosa's point of view, he's got to open up the country. COVID numbers have collapsed now. It's still a mystery to me because they collapsed before any vaccine intervention. It still remains curious how that happened. I think there are many epidemiologists who will be looking into that. But the overall point being, we need to see South Africa build on that fourth quarter number. We need to see acceleration. Their biggest challenge remains joblessness. We need to see job creation. And just to touch on a couple of things that have been going on, which I think will impact South Africa, is we've seen quite a sharp sell-off in emerging market assets, Brazil leading particularly in the last 2-3 sessions. And I think South Africa will be looking over its shoulder at that market movement. And for people looking, I think for me, the big signal is the price of the Chinese currency, which has been rallying for a long time. And I think was highly correlated to the rally we saw in commodity prices and the rally we saw in some emerging market assets. My concern is if that starts to unwind, what we're seeing in Brazil could come and infect other markets like South Africa, infect the oil price, which has begun to lose a bit of steam. And we should be keeping a close eye on that. But the minus 7%, Barson, worst performance in a century. It's no joke.
Yes, it's no joke. I agree with you. But let's quickly move on and wrap it up this morning on the North African corridor. Just a few stories there. I'm sure everyone is interested in the earnings season. Carthage Cement board meeting, a general meeting for March 24 to okay their last year 2020 numbers. The story between Chevron and Cairn buying Shell Egypt's upstream Western asset is one story as well. Bank Central of Morocco reporting a net profit decline of 67%, 1.28 billion dirham last year was no good news at all. So a bit of these are coming through, and then we want everyone to focus on that. So let's just leave it there for this morning. Thank you so much, everyone, for being part of the program. Akitude Suleiman from Greenwich Merchant Bank, we appreciate your time. Joshua Adebisi from Vista Capital, we appreciate your coming all the time on the show. Ayode Jiebo from Chapel Hill, Denham, and of course, Alikan Saju, called the rich man of Nairobi. Thank you so much, everyone. Have a great day and see you again tomorrow. Bye for now.